Hello, welcome back to Crypto. Oh my God, we're getting into it on this Thursday. Look, there's been a lot of stress around the overpricing of the assets, the way it's performing on the retail, and that broader market structure is something I've talked about, but it does look like we might be on the upwards trajectory. Let's get into it. Now, the hot news right out of the gate is this idea that Fannie Mae and Freddie Mac are going to accept Bitcoin as collateral for a mortgage. This is a really big deal. To present day, everyone that I know that's made it in crypto has never been able to use that as a way to get a house, right? To upgrade their lives, to build something to live in. And regardless of the fact that they want to hold and store that wealth for future generations, the only actual solution has been to exit that position, to sell your Bitcoin or Ethereum in many people's cases and use that cash to go in on a house. Now, that takes a huge tax obligation on you, so you're actually losing a lot of money in doing so. And the idea to use Bitcoin as collateral, granted, it will be Bitcoin that is on exchanges only, but this means that people can actually continue to hold on to this asset as it accrues. And this is one of the more useful things to occur to cryptocurrency holders. This is a really big deal and a massive life upgrade for people that are committed to the industry. Secondly, we have Arizona coming in after Texas passing a Bitcoin reserve bill. Now, this is something that, I expect to trickle in slowly but surely, but it just maintains that momentum that I've been talking about. We're now seeing 2 states in the US establish a crypto reserve. It's all coming from illicitly gained crypto, so things that they've captured from criminality or things of that nature. They're not going out and actually buying this BTC, but joining nations, joining companies. We now have 2 states in the US, and that's pretty cool. Now, I want to hop into the core concept here, which is something that's been very stressful throughout this entire cycle, which is these overvalued projects raising tons of money on the private capital front and just really destroying retail as their exit liquidity. And here we have one called Humanity Protocol. It raised $30 million at a $1 billion valuation for a decentralized identity rival to WorldCoin. Remember, WorldCoin is the open AI company, partner company, that scans your iris and uses that to create a proof of humanity identity. Now, at that $1 billion price tag, you would expect a company to have some clear product market fit to really know what it's doing. But let's look at the price launch, right? Comes in here at 5 cents and just immediately begins to dive. So this is something that we're seeing consistently. And if we look at its fully diluted valuation coming down from $1 billion, it's only 200 million now. That is just enormous price destruction. And who's really being left with the bag is anyone that tried to buy in when it went live. And this is now something that the protocol is going to have to contend with, right? This big red downtrend down and to the right is as much marketing as anything else a protocol can do. So in the same way we saw Gorbagana on Solana come from a meme coin that was just accessible for everyone to hop into, we have again these millions of dollars my take is that this asset is probably stakeable. And what's going on with a lot of these venture capital funds is that they will lock the tokens that they've invested in, but they will lock them into a node, gaining a staking reward. That reward is often sold, and they can make more money than their investment in selling the stake, and they never have to actually touch the invested assets that are locked for years. So this is kind of a way to get around a token lockup, and we can see how dangerous it is to the industry. Like, who wants to invest in these things if this becomes our standardization? Now, on the positive note, we're seeing a response to that. I've talked a lot about the end of the foundation, around how the current regulations are going to allow people to put revenue back into the token itself. And we're starting to see it take sort of an organic approach. So this is Morpho, and let's just dive in really quickly. Morpho is the open infrastructure for on-chain loans. It's on the Base app. Again, it's kind of like an Aave thing. And it's a very interesting idea. We've seen lending, borrowing, to be clear, fee generation machine. It is DeFi. In my opinion, DeFi is where the revenue and where the fees are captured. And, seems like a solid product and something that can actually pump out revenue. Now, something interesting posted by Paul Frambot, the co-founder and CEO of Morpho Labs, is that they have publicly announced their unification under one token. A counter to this would be Uniswap. Uniswap has Uniswap Labs that collects all the fees towards its equity protocol. The Uni token itself has 0 fee capture and really doesn't do anything. It's entirely speculative, and it's quite frustrating that it keeps performing fairly well. On the flip side, Morpho comes out and it says, look, today we announced announced that Morpho Labs is becoming a wholly owned subsidiary of the Morpho Association, a shareholder-free entity. One network, one token, one aligned incentive. And if you want to go on and read further about this, go for it. But what this is saying is that all value captured through the protocol itself will flow back to the token holders. This was something that was very dangerous to do under the Gensler regime. They would have deemed you a security without fully defining what that meant, and they would have come after Morpho with enforcement actions. Now we are seeing that fear begin to thaw, and this is extremely rewarding, especially as we had that Blockworks article that talked about token transparency, and token transparency is going to become a greater demand from the industry. Similarly, we have the meta now with Hyperliquid, which took no VC capital, no private funding, and rewards its token holders via a buyback and burn. So when we go over here to DeFi Llama, we can actually start to see how these dashboards are being built around revenue. Now, the top are really stable coins, which is pretty insane, right? You want the $20 million of revenue in 24 hours. That's going to be a stable coin issuer. But other than that, we have swapping mechanics. We have the Tron chain, which is proof of stake, Hyperliquid, the exchange, Pump.Fun, which allows you to mint a meme coin and sort of just run it from there, Ether Finance, Meteora, Aerodrome. It goes on and on, but we can begin to see that people are beginning to value these protocols in the way they would a stock, right? We want to see their revenue. We want to see what sort of fees and capital generation they're able to create. And these are going to be the more fundamentally valued tokens moving forward. So things like Aerodrome that just got built into the Coinbase app to provide a DEX opportunity to all Coinbase users. So this is all exciting to see because in my opinion, I've stated this before, but blockchain is really about building autonomous businesses that reward all of its network participants. And that can only happen if the revenues flow back to the token holders. Otherwise, we've generally seen inflationary events where the token holders maybe earn a proof of stake yield through inflation, but that gets us back to something like this. If you keep printing the supply over time, I mean, the token price goes down, the market cap stays the same, right? So early investors exit at a higher price and everybody else gets kind of saddled with the bag. So this is all very exciting and we are moving towards a much healthier industry as a whole. With that being said, stay safe out there. If you want to hop into this DeFi Llama dashboard, it's in my sources. I highly recommend it. It's a good read. And of course, if you want to read more about Morpho, also in the sources there. As always, don't lever up too much. Stay safe and I'll see you tomorrow.